Hi, Utkarsh, how are you?
Hey Rajan, hi. I'm good, thank you. How are
Toby,
you?
welcome.
Hello.
Hi.
Hi, Malcolm.
So we have in the panel, it's an interesting panel on DeFi NFT startups, all about token generation events, IDOs, equity, fundraising challenges, opportunities. We have Patrick Poirier from, he's the CEO of Defiance Games. We have Tobias Bauer, he is representing Blockchain Founders Fund, he is the principal, Singapore. We have Utkarsh Shrikant, he is the co-founder, Sporttech. Then we have Malcolm Tan. He is Chief Strategic Advisor, Technicorum Holdings. He'll be moderating the session. Malcolm, you're
Thanks,
back,
Rajan.
so your audio video is clear? Yes.
Yes.
So go ahead with
Okay,
this
great.
panel on the.
We have how many
Go ahead.
minutes? 15 minutes? 20 minutes?
30 minutes
30
minimum.
minutes. Okay.
Maximum
Okay,
up
great.
to.
Okay, so
Because
let's
you are at late night at Singapore, so timing is no problem for me. For you, timing is problem.
okay. Thanks, Rajan, for the lead up to this, and great to see all of you in the panel. So let's start off with a brief introduction about yourselves and what your involvement is with the topic at hand, TGEs, IDOs, and equity funding. Patrick, perhaps we can start with you.
Yes. So I run a crypto investment fund of $25 million. It's been going on for a year and a half now, I think. And when I saw the play to earn kind of industry and how it was moving, I realized that I needed to start a business in that area. So I became an entrepreneur again. We're still running the fund, obviously, but it's going really well. And in a week or two, we are also involved in DeFi. So we are launching a token. So the token is already on the market. It's called FatStack. But we are launching on Polygon because the Ethereum network currently, as you know, is not really usable for DeFi. It's too expensive. And our token is really unique. It's kind of a replacement for stablecoin, but that allow you to get growth as opposed to a stablecoin that you just lose value. So I'm looking forward to talk more about the Defiance play to earn game. It's a really interesting market.
All right, thanks, Patrick. Tobias, maybe you can describe introduction about yourself and what involvement you have with this specific topic.
Absolutely. Thank you so much for having me. I'm actually calling out of Dubai at the moment, but I'll be back in Singapore very soon. I'm a principal blockchain founders fund. We're an early stage venture capital fund focusing on a blockchain space. I've been around for 3 years. We backed 65 companies so far, a 75 million fund. And we actually been invested in blockchain gaming 2 years ago. We backed a company called Splinterlands as the first backers. We also did digital fashion a year ago, before that kind of space became super hot as it is right now. And especially with the new fund out of Singapore, we do want to double down on the metaverse, and of course gaming as well, sort of all these different areas which fall into the metaverse. I think interesting from a fundraising perspective is we work with our companies very hands-on. We typically have weekly calls with them and try to drive a ton of value and do raise with them together on equity and token, and also do invest on the equity and on the token of such startups. It's typically very early stage, pre-seed, seed. Some of them don't even have a full product yet or a pre-revenue, and some of them don't even have a token launched yet, right? So we help a lot with like the white paper, getting token economics correct, and then of course bring the right investors in to really drive users with a token, right? To make it a, besides the financial reward, even a very operational tool, essentially.
Okay, great to hear, Tobias. Utkarsh, maybe you can describe what you're doing in this space and a brief introduction about yourself.
Yeah. Hey, hi guys. Thank you, Rajan, for the opportunity to talk. Okay. So we are starting a NFT marketplace. So basically, we are planning to start this from India specifically, because whereas existing global NFT marketplace have a very scattered approach when it comes to the listing of NFTs, Indian markets are still trying to focus on the celebrities only. So which results in false understanding of a market and often result in manipulation to sale. Okay, so whereas being as a Cryptospark, we are separating these two markets into a single platform, whereas a premium and an open market. Premium category will be for high skilled scrutinized through well-defined process, whereas an open market will allow people to list the NFTs and marketplace free of cost. So also we are coming with some better features such as a gas-free marketplace. So whereas artists do not need to pay a high gas fee. Another, we have a good feature that is cross platform. Okay, so we are planning to, means currently our platform is ready with the Ether, but we are also integrating with the Binance and Matic. Okay, so that will be our next stage. And we are in just a pre-seed stage. Okay, so we have just started, and we are planning to launch the application on 1st of January. Okay, so we are almost ready with everything. So this is about the Cryptosparkx. So we are looking for some funds. We are trying to raise some funds, and we are also planning to launch the token in end of January. So this is about Cryptosparkx.
Okay, great. Great to hear from you, Utkarsh. So a bit about ourselves at Technicorum Group. We are also very similar to what Tobias does in terms of we support a lot of projects, and we are basically our core specialization was advisory, A to Z. We handle all aspects of projects. And let me lead off with some of our recent experiences. Of course, as all of you are aware, the market keeps changing, right? So right now, the projects that we have, typically the allocations get taken up very, very quickly. And typically what we're seeing is funding sizes of $1 to $5 million. And the VCs who are very much into the space will ask for the private allocations. Of course, projects will try to parcel this out, especially for the extremely hot projects. They will only give out small allocations, 50 to 100K per VC that comes in, unless they're extremely strategic. So this is our experience with some of the projects we're running right now. The moment the news went out, there's a whole group of VCs who already put up their hands and asked for all of the allocation. But we don't give everything out to everybody. So we parcel them out. And the next stage, the first public stage, we actually go on launchpads, because that seems to be the most popular way to build communities right now. So every launchpad will have like 50K, 100K allocation, which sells out very quickly and builds up the FOMO and the market interest. And then the next stage, we look at an IDO on one of the leading platforms, depending on whichever protocol you're using. And then the final stage is to get onto a tier 1 or top tier 2 centralized exchange. So I'm not sure what your personal experiences are in this space with current projects, because projects that are 6 months, 12 months ago, it's a different model already. So let's focus on what you're experiencing with current projects. Patrick, maybe you have some comments on this.
Yeah. So for us, it's always been a struggle to raise capital from investors, because the thing, we don't come from a crypto industry that much. And it's whenever you speak with people who claim they can help you, sometimes it's really hard to know who's legitimate, because there's so much scam going on that we've worked with some people in the past that we're asking for retainers to help us raise money. And at the end of the day, the retainer was gone, several, like $20,000, and there was no money raised at all. So we had to raise from our own network, and we raised several $100,000, but the people who were supposed to be expert could not help us out. So obviously, I'm a bit skittish often by giving retainers. Always, I try to recommend people to try to look at people like I don't know how you I know we spoke, Malcolm. I don't remember exactly how your structure works, but if it's on commission base, to me that's what I recommend a lot of entrepreneurs to focus on, because then if they really have a network that is solid and they have a project that is solid, I don't think it's going to be a challenge to really raise. So it's beneficial for the service provider and the company to do it that way. That is a recommendation for me. And saying our fund, we're willing to invest, but we have, because we don't come from that industry, we don't have such strong deal flow. So the investment we've done so far were more like in tokens that were already on the market. We're still looking out for those good projects that are pre-launch, essentially. It's hard to find because, again, the due diligence is long because there's so much scam going on both sides of the fence that it's a challenge.
Right. So, Patrick, you offer a very traditional or outside looking in kind of a perspective, like you expressed a few times. So, just to answer your query, typically we don't take just success fees. On extremely rare occasions will we do that because everybody wants our help. So we do have to charge the retainers in order to separate, the quality projects and those who are willing to pay. Because if we just offer contingency services, everybody will come to us, and we can't separate them out. What we do is to provide a KPI for the retainer. So we will give a specified number of meetings for the monthly retainer. If you don't hit it, then it rolls over to the next month. So we don't eat into the next month's retainer. Typically, there'll be a retainer plus a contingency fee. So success fees in this industry are basically 5 to 10%. And that's what we've been charging for the last 4 years. We have had a fair amount of success with this model. Perhaps, Tobias, you can offer a perspective on what I described as what we are experiencing as the current market conditions on how to launch projects and the rounds of funding.
Absolutely. I mean, there's two sides to it, right? There's the investor side and then there's the project side or the venture side. Starting with the investor side, maybe, I think there's two interesting points. I mean, first of all, what Patrick said is that very good projects are highly oversubscribed, especially when we raise on token. There's no, I mean, actually, it's most of the time that like project's going to be 10, 20, 30x oversubscribed, right? And that obviously pushes valuations in very high levels, right? When then sometimes it's not even, in my opinion, not always justified, right? Especially in the gaming space when no game has essentially been launched, right? No user has ever played the game, but projects still raising on 200, 300, 500 million valuations on token basis, right? Which makes it then, of course, now it's great because there's a hype, right? Every investor wants to go in and it works because community has been strong and people support it. But then there are certain projects to actually launch a game or to launch a certain venture that's basically going to take time, right? I mean, the likes of Ubisoft, EA, they take 3 to 5 years to build a solid game, right? And this is a huge team. They have capital sources in the immense, essentially. So there will be a big question if that hype on that token will be sustainable until the product is essentially launched, right? So I think here investors just need to be careful, right? Obviously need the due diligence and make sure that you enter something at an early stage when you will still see upside. But it also, of course, depends what kind of investor you are, right? I mean, if you're just speculating on price upside on a launch, then it probably might be fine if you're a token fund and you're doing this. If you're more looking for substantial businesses, then obviously it's a very different view you have to have on that. And a second thing is from an investor is that if a company is claiming to be a DAO, right, essentially autonomous organization, it's still challenging because most of the projects are not essentially a complete DAO, right? I mean, they're getting there, they're on the way. We're still a Delaware company. I mean, A16Z also brought a report like this. It's pretty interesting to have a look at. So for investors, it's important to understand if that value of their company is essentially fully reflected in the token, right? Because if they still raise on equity side or if they buy back equity with token proceeds and all these kinds of things we've seen in the past, then obviously it's important to have your fingers on both sides, right, on the equity and the token. That's what we are doing at the moment. Typically, we invest very early in those projects before a token has been launched, invest on the equity, and then do support the token once it's launched. And I think that's right now in the current market conditions a good way and a safer way to also, be sustainable in a potential bear market and still have interesting upside. Now on the project side, I think even the hot project, even the interesting projects where the capital raising process isn't necessarily the issue, but we see a lot that, and of course it depends a bit on the tokenomics, but some investors get big parts. Let's say you raise a 5 million, you give one investor 1 million a token, right? That obviously is a challenge because that investor has a lot of power of where the token price is going, right? If this person would dump when the token unlocks, even if it's like a stepwise unlock, that would give a huge power and potentially even changing the price in a negative way. So I think you should be a bit careful. Give small allocations to strategic investors. Some of the project we have done, it was a 4 million raise. We had 63 investors on the token in those projects, right? Everybody got a small allocation, but everybody was highly strategic, right? So you obviously bring in key opinion leaders, right? You want to bring in certain launch pads. You want to bring in certain exchanges. You want to bring in maybe market makers, right? Who can drive that value. And as a second thing, a token raise shouldn't be seen essentially as a pure financial raise. I mentioned this at the very beginning. I think a token has a lot of power to actually drive users and drive growth on the project. And especially if you're doing a public sale, we right now completely go away from making a public sale in the first place because you have all sorts of regulatory issues. But once you do, the public sales have actually never driven that much users. It was always the key opinion leaders who get a small allocation, drive it through the channels, and then essentially getting users on a platform because you're building an awesome project and not because someone is speculating on a price going up and anyway going to dump it, right? So it's a very different sort of mindset on actually raising money than in the traditional equity side. On the traditional equity side, right, of course you want to have big brands and the Sequoias of the world and likes this, but you still just care about essentially getting the money for because you have a runway to proceed, right? You have a certain burn rate. So I think the equity and the token raise from a venture perspective needs to be looked at a bit different, right? And then of course community is something which is now driving a ton of value in that space. And essentially it's not always the project itself.
Right, great perspectives, Tobias. So some basic comments, and also to answer what Patrick mentioned earlier about due diligence. Typically in this space, if you do your standard due diligence 6 months, 9 months, the phase has moved on. It's already the next phase. So there's absolutely no time to do that kind of thing. What I'm seeing for typical due diligence for VC funding is actually 1 or 2 weeks tops. Because if you don't take it, someone else will take it. So your team really needs to move very fast. And more often than not, it's by word of mouth and by recommendations. So as you're aware, if you're not on the in, you won't even get access to these. I know several top VCs in this space, and they want to get into projects and they can't even get in because they have ticket sizes, millions of dollars they can spend. But all these projects only give you small numbers like 50K, 100K. They don't want you to take very much. So this is the challenge for VCs with a lot of AUM. You can't even deploy it for the great projects that you want to get involved in. Yeah. But we find that the space is extremely hot. Like earlier panelists that were talking about their perspectives. If you have a good project, if you have a good supporting base, the moment the word gets out, everything is snapped up really, really fast. For one of the recent projects that we launched, it was already spoken for the moment I pitched it to the first VC. He said he wants an entire allocation, and he's just going to distribute it within his own network. So that's what we see with some of these projects right now. So Utkarsh, maybe you can share your perspectives. What do you think about what I described, or have you not been in this stage yet?
Not really. The challenges which we are facing is like investor want we means me and my partner both are not coming from a crypto background, as Patrick just mentioned. Like we have from different background. I'm from a e-commerce background, and whereas my partner from aerospace background. So why is like investor always interested in a crypto background people? Okay, so but we have a good project, we have a platform ready with us, and we are waiting for some fund to go live. Okay, so this is the case which we are currently facing. So in this scenario, means I like to know, like, means going live is a good idea, or we should wait for some funding.
Yeah, so it's a bit like what I described earlier. Now the current scene is like this because launchpads became very popular over the last 1 year, and they come with their own built-in communities already. And almost every project you see on the popular launchpads are fully sold out very, very quickly because it's a built-in self-replicating process. They get in at early allocations, so the price action definitely will benefit the early adopters. And the people who are on the platform already expect all these. So it's like a really rapid fire kind of pre-IPO platform, right? If you are familiar with the traditional listing requirements, if you get in, let's say at the 10-cent stage, you are expecting a 10x return when some stock IPOs, and that's why people get into the pre-IPO as much as they can. So now what you see with the launch pads in the space are exactly like that. And that's why a lot of projects actually do small sizes on all these launchpads and sell out really fast, build up the FOMO, build up the market interest, and then move on to the bigger and bigger platforms. I just heard like a couple of days ago about one of my contacts in Singapore. She launched a project of her own, and it was sold out in seconds. I think 10 seconds, totally sold out on the launchpad. Yeah, so that gave a lot of momentum for the next bigger race, right? I think they sold out pretty substantial amounts, like small 7 digits, very, very quickly. And that built up a lot of momentum for the next stage. But anyway, happy to share all these in a private session after this, if you have a lot of questions to ask. But here we are to talk about this topic and to share more about, what we're talking about for token generation events. Do you guys see any difference in TGEs? The TGEs from 4 years ago, an earlier speaker was mentioning about SAFEs and SAFs as well, are kind of evolving along the way. So Patrick, perhaps you have any perspectives on what are the different token generation events, how things are being moved along the way right now?
I think it depends on the market. I know for metaverse and more like a play to earn, a lot of those organizations make private sales first, and then once they have a base of liquidity and all that, then they look into IDOs and, as you said, Launchpad. And the thing, a lot of it is already pre-allocated, basically. So that's why it goes so fast when you see that it's gone in 10 seconds, is that don't expect to go there to shop for a deal. You have to be there much earlier than that. Because like your early investors probably will have also early bids to try to snatch a few more tokens. So the entire market is so crazy right now that the challenge is to make it sustainable for a much longer time period. As Tobias said, the thing that was, I know 5 projects that are AAA games that are in the work right now. None of them have launched with like a launchpad or like a IDO yet. They raised privately, but like, $10-20 million. They are like, people from Ubisoft, people like that have launched new studio to tackle this. Once they launch publicly and like either private investors or that are much smaller or the public can snatch it, the market cap, if it's in like, $1 billion already or $500 million, it's a little bit hard to achieve the real upside. So there's a lot of danger that once the previous investors start selling, if there's not protection mechanism in the token itself, it could go pretty bad for some investors. So it's important to always look at the supply and the market cap when it's fully diluted. and what are the trigger event of when it get vested and all that stuff. What I have to say though in terms of play to earn, I think the market cap has a lot of room to grow still, because if we look at Axie Infinity, the average value of revenue per user is about 10 times more than the typical games that is not a play to earn game. So that means that if you're like a game studio like Ubisoft and you have some of your games that generate $500 million of revenue per year, you might be actually generating 5 billion for that same game. So it's very attractive financially speaking. So that means that the market cap, a lot of those games right now are in the 30 billion or less, like a YGG, for example, that also are not building games but monetize from games. I think there's still room to grow for a lot of those things as people realize that there's 2.7 billion gamers in the world. So all the meme coins that have no utility, I think it will go toward play to earn and things like that, where there's a utility on top of the adoption, just because of the number of wallets that will have access to it. So it's a really interesting market to be in.
Right. Very astute observations and right on point for someone who says that he's not from this industry. I totally agree with everything that you have said, and it's great. Yeah, it gives a very good perspective about things. Unfortunately, it seems like we have missed. We are missing Tobias. Oh, he's dialing back in. Tobias, are you still with us?
Yes.
Okay, great. Technical glitch. Okay. Do you have any other counterpoint or anything to add to what Patrick was mentioning?
Yeah, I think it's all very, very good points. I mean, we as a fund, we only invest on like softs basically. I mean, safe typically for equity, for token. We invest in different private rounds before there is a token generation event or before there is something happening on launch pads, and then we do support quite a bit on actually choosing the right launch pads or influencers or even launch pools, and then of course building these exchange relationships once that becomes relevant. And here I think it's interesting to mention that I think mostly right now every fund, and I think also most of the projects, they do track because we have all the wallet addresses, right? For all the people investing in our portfolio companies, for example, and we do track who actually would dump the token or who wouldn't, right? And then because everybody is going to tell you that they're not going to dump the token and they're long-term partners and want to support you and do all these things, but then there will always be a few who will then, of course, once they can dump the token to make sure that at least get their money back, and then of course everything else is upside. So everything will be tracked, and most of these projects then just won't get allocation anymore, right? Because no one essentially wants to have you on your or in your round if you have done this a couple of times in the past. So it becomes very transparent, also because the industry is still very small, so everybody knows each other basically. So it's easy to lose reputation in the space, which then obviously makes it very, very difficult to get future allocations in any early stage rounds, right? I mean, we've done Monkey Ball recently in a very early round. I don't know if you're familiar with the game, which was very successful. We have invested together with, I think it was Lightspeed and Republic. And that was also a project which was, highly oversubscribed. And what we end up doing then is running liquidity pools, right? So we are staking or bringing that liquidity back into the project essentially. Of course, it's always a small amount, probably like between 1% and 5% of the total liquidity, but it's still, is what we want to do to be that strategic partner moving forward, right? And I think that's what all funds need to do in order to get allocation in interesting projects moving forward, right? And that's also what the venture side should do, right? I mean, track all your investors, make sure you follow up with them, and actually, ask if they add the value they want to add to. Of course, in a nice manner. I mean, not everybody can respond anytime, but still over a long-term idea. But what I also want to mention is, and we see this a lot of projects, they only think that support needs to be there until the TGE, basically, right, until launch event. But if you're really a long-term project, that's just a very, very small part of your journey, right? Essentially, that's like 1% or like 0.5%, right? Because it's about building that liquidity, keeping it high up, actually building a good project. So we now see a lot of great projects which are still very short-sighted from a mindset perspective, right? And I think that needs to change. We need to see a way better understanding of what it means to develop a great game, what it means to develop a great platform, similar to in a non-blockchain space, right? Where a startup is something which has been, has a reason a fund has a life, has an 8 or 10 year life cycle, right? Because you need to have that momentum. And I think that needs to happen in blockchain space to make it a lot more sustainable and bring evaluations down where they should be, and making something, a bit more down to earth, right? I know the hype is interesting, but there's still a couple of reasons for that as well.
Right, great perspectives, Tobias, and thanks very much for that. Just one thing to add, which I didn't expand on, and which was mentioned a couple of times as well. KOLs are very important, and all the key strategic partners, because the KOLs and the influencers are the ones that really bring in the community. If you look at blockchain projects, crypto projects, the most important thing is community building, because once you have a community that's involved and they are the ones that are led in by the influencers and the KOLs, then your project will take off. It is paramount importance, and the way that to do it is actually to get the influencers and the KOLs to invest their own money into it. Because if they just get a free allocation, they are going to dump, right? Because it's just money. But if they put their own money into it and they show their wallets to their followers, and the followers can see that they are personally invested, then that speaks volumes. So this is a very key element of fundraising. You need to get the people vested into your project. All right. Utkarsh, before we end off, maybe one last word from you. Any other comments about today's topic?
No, nothing much. Like, means I agree with the things like the community building is an important thing to raise a fund, to run a good product, and a long-term vision for the tokenization or the good running of the product. That's it.
Okay, great. So, Rajan, you can end this session, I guess. Thanks very much, Patrick, Tobias, Utkarsh, for being on this panel. Great
Thanks all of you. It was very
so
interesting, great insights, especially from Patrick and Tobias, Malcolm. Thank you, Utkarsh. Look forward again to the next session. Thank you.
Okay, thanks. Bye-bye.
Bye.
Thank you. Bye-bye.